The Russia-Ukraine tensions have grabbed the attention of the world and they are reaching tipping point. What effect is this likely to have on the financial markets going forward? Welcome to our market analyst videos here at Zenfidex. For those who are new to the channel, my name is Connor and I'm the senior market analyst at the company, providing to you daily videos on market analysis and educational content. And for today's very important video, I'm going to analyse the effect of a full-scale Russia invasion of Ukraine on the most popular financial market assets. Enjoy. So I'm sure you've probably heard about the Russia-Ukraine saga in the news at the moment. No matter where you are in the world, it's been dominating our screens, almost really like COVID didn't happen. And to give a current update, Ukraine is set to declare now a state of emergency. But why? Well, the biggest sign of invasion from a Ukrainian point of view is that when Russia recognised the independence of two separatist-controlled territories in the east of the country, and then they went ahead and deployed troops there. Does this count as an invasion? Well, I'll leave that up to you really to decide for yourselves. What's been the response across the board? Well, let's start with the US, who, let's be honest, haven't really ever seen eye to eye with Russia. President Joe Biden said, he announced last night actually, that sanctions will be placed on two large Russian banks. Essentially, they are sanctions on Russian finance, and it actually freezes their assets in the US. His exact quote was, "We will cut off Russia's government from Western financing." Of course, this brings debate to whether this is enough or not. Is this enough sanctioning? But Biden has promised that more sanctions are coming and that Russia will pay the deepest price. Now, over in the UK, the sanctions were similar. It was a similar approach, I think, to the US, again creating a debate as to whether they were serious enough. He also announced yesterday in the UK, Boris Johnson, that he is imposing sanctions on 5 Russian banks and 3 wealthy people. Much like Biden, Boris Johnson's fighting talk was centred around there being more sanctions on the way as the UK prepares for a full-scale invasion of Ukraine. Now, there were other responses around the world too, and there'll continue to be, so make sure you're monitoring them. Just a couple of examples: Germany halting the approval of the Nord Stream 2 gas pipeline from Russia, and that's a pipeline that brings natural gas from Russia to Germany, and it's been very controversial over the years anyway. In Australia, Prime Minister Scott Morrison said a full-scale invasion of Ukraine is likely to take place within 24 hours, and he himself is announcing sanctions. And as a whole, really, whether you're someone who believes a full-scale invasion will occur or not, one thing that cannot be argued is the uncertainty and volatility it is causing in financial markets at the moment. This isn't likely to go anywhere fast. Let's take a look at the chart and some of the most important markets that have been affected from all of this. So really there was 3 charts, 3 different markets I wanted to go through and just give an update really on the effect that, if this escalates further, what the effect may be on some of these most important and most popular investments really. Now I'm on the Nasdaq 100, which has been falling this year anyway, mainly due to the hawkish Federal Reserve and the interest rate hikes coming, and the switch to more value stocks rather than growth stocks, the ones that we see in the Nasdaq. And what I found really significant, of course, with geopolitical tensions rising, anything that there's when there's risk involved and uncertainty involved, risk assets like the Nasdaq, they tend to fall. Risk indices like the Nasdaq tend to fall. So as you can see, that's what happened. We had an initial rally before the tensions began or escalated, should we say, and then since then we've been in this massive sell-off. Now there's something actually really important that I wanted to mark on the chart for you now, and it was really this level that I'm seeing here. So the reason I think this level is important is because this was the swing low down at around 1720. That was the fall from the previous hawkish Federal Reserve. Now we've had a situation now where you can imagine the buy the dip traders getting in and around, getting in the market around here and buying the market, and probably putting their stop loss just below these lows, thinking that was the floor of the market. Well, no surprise, what we see is the price has actually run down, and it's actually taken the liquidity to the downside, and has since then snapped back to the top side. So this is potentially a bullish sign. And if I actually put in our moving averages, so you've got the 50 and the 200-day moving average in right now. What's concerning really is how we're respecting this 200-day moving average, and we're actually trading below it for the first time since the pandemic. And really, this drop that we're seeing is quite similar to what we saw at the beginning of the pandemic, which is quite concerning actually. Now, if you're someone who has traded this recent buy, then of course maybe your stop loss can go just below where this liquidity has already been taken. But my take profits really for the Nasdaq over the next coming couple of months, I'd say I can't see the market really going any further than this 200-day moving average at the moment. It's quite concerning what's going on in Russia and Ukraine, of course, and if this escalates any further, then the Nasdaq is probably going to fall. Now, if I actually compare this to what's happening with Bitcoin as well. Now I've put a Bitcoin price chart on there. Let me get rid of the moving averages, and you can actually see how well correlated it is. Let's get that online. So as you can see, I've got the Bitcoin chart here and the Nasdaq, and as you can see, both of them are really snapping up since that recent drop. But what I found quite significant is this divergence we have in the Nasdaq, which is showing a lot more weakness than Bitcoin, which is creating equal lows. So is this a sign that the Nasdaq is considerably weaker than Bitcoin potentially? So there'll be more value in maybe selling the Nasdaq over Bitcoin at the moment. That's it really for the Nasdaq. Just to conclude, if the tensions do escalate, then I expect the Nasdaq to fall a bit further, and I wouldn't have any buy and take profits further than the 200-day moving average. And I think over the next coming weeks or months, we could see the Nasdaq create some new lows. But let's see how it reacts from the current sanctions. The reaction was quite good. Maybe there was a relief in the market. Oil now, and of course we see Germany blocking that Nord Stream 2 pipeline. Now what I found in oil, and if you watched my short video, was I actually found quite a nice buying opportunity. As you can see, this uncertainty and the tensions that are being caused, and of course we have supply constraints in oil at the moment as well. That's caused oil to make a push really towards that $100 mark. Hasn't reached there, obviously it's only got to 95, but there's quite a lot of talk around whether we can actually reach that level. And crude oil at the moment, what I'd like to see is, I'm bullish on crude oil at the moment, and there's quite a lot of liquidity sitting below this level that we have here. This low that is at around 90. Now what I'd like to see is the price fall below this liquidity line, take our liquidity and fall into a buy zone that looks something like this. Call it order block, call it a buy zone, whatever you'd like to call it. If we can get a buy from this buy zone, which is sitting just below, or it's actually on the 90 level, which is obviously a key psychological level as well. I believe the tensions in Russia and Ukraine are going to help oil to potentially rise up towards that 95 level once more. That's a 5 risk reward trade. If you're very bullish on oil, which I know some of you are, you could target that 100 level, which then you're talking quite a significant trade here, around a 9 to 10 risk reward. And finally, we're looking at gold now, and gold's probably one of the only winners, of course, of an oil in the market at the moment. Gold is a real winner from this volatility. When there's geopolitical tensions, when there's volatility and uncertainty in the markets, gold tends to thrive off this situation. We saw that during the pandemic when it reached record highs. Now, for me, gold is just at the moment in this consolidation pattern, in this range between 1915 and 1880. Now I see a broader move in gold, and I see gold actually going up towards and testing that 1950 level, which if I go onto the daily chart, when was the last time we was at that level? That would mean a break of this high, so there is some resistance here, but it also mean 1950 we're reaching this real key daily order block from where we had that huge slump at the beginning of last year, sorry. So gold is probably going to be one of the winners if the escalations, if the tensions escalate in Russia and Ukraine as well. Either way, the markets are choppy, and I would say whatever trade you have on, make sure you're managing your risk carefully. The uncertainty and volatility in the markets is likely to mean risk assets such as Bitcoin and the Nasdaq will fall, and it's also likely to mean safe haven currencies, maybe like Japanese yen, will increase, and things like gold as well are likely to outperform in a situation like this. So make sure you're staying safe in your trades, and make sure you're managing your risk carefully, setting appropriate stop losses. If you are in profit, don't be scared to put your stop loss to your entry level, and then you can't lose out on your trade. So that's my views on what's going on at the moment in the Russia-Ukraine saga. Let me know what you think in the comments. Do you think Putin is going to launch a full-scale invasion of Ukraine, and what do you think the response of the world will be? I'm interested to hear your thoughts as well on how it will affect the financial markets, because it's going to have a huge ripple effect in the next coming weeks or months. That's it for today's video. Take care, everyone.